Okay, let's get into candlesticks, a little bit of what the time frames mean correlating to the candlesticks. All right, so on the chart, we were just talking about price action in the last video that I did. So when you see a red candle, that means the market is going down. And then when you see a green candle, that means the market is going up. So the red candle is called a bearish candle. And then the green candles are called bullish candles. Now, when you look at the candles, there are some things you need to know when it comes to just one of these candlesticks and the anatomy of the candlestick. Right here, we have the wick, and then we have an open, close, and then another wick. But let me just go to, yeah, let's just get into the breakdown of the candlestick. So here is a little illustration of the breakdown of a candlestick. Remember, I said the green candles are your bullish candles and the red candles are your bearish candles. Okay, so the candlestick has all these components into it. So a candlestick has all these components. First, let's start with the bullish candle. So you will have an upper shadow, which sometimes we call this the wick, and then you'll have the high, and you have the close of the candlestick, and then you have the open, and you have the low, and then you have a lower shadow. But we call this sometimes the wick of the candle. Vice versa, when we have a bearish candle, which is the red candle going down, that means it's selling. We have the open of the candle, and then the close of the candle, and then the lows, the highs, upper and lower shadow. Just kind of be familiar. The thing that you want to be most familiar with is the open and the close of the candles. That's what you want to be mostly aware of. Don't worry too much about the high lows when it just deals with the candlestick by itself. Just remember the open and close. Okay. So when you're looking at the candlesticks, each candlestick is going to mean different things depending on the time frames. There are different time frames on TradingView, and again, this is where I mark up my charts, I do my analysis, and the only thing that I'm doing away from this chart is placing my trades on my phone. But back to the candlesticks, each candlestick represents something different depending on what time frame you're looking at. So right now I'm on the 15-minute time frame, and if you're on TradingView, they have different time frames. You can look at the seconds, 1 minute, 3 minute, 5 minute, 15-minute, hour, 2 hours, 4 hours, 12 hours, the daily, the weekly, the monthly, 3 months, 6 months, anything. But right now I'm on the 15-minute. One candlestick, this 15-minute time frame that I'm on, means that this one candlestick was 15 minutes. It took 15 minutes for this candlestick to print this. And it took another 15 minutes to print this. This is another 15, another 15, another 15. If I switch to the hourly, okay, now we're on the hour time frame. Now each candlestick is 1 hour. So this is 1 hour, this is 1 hour, this is 1 hour, this is 1 hour. And if I go to the daily, same thing. If you go to the daily, okay, this is one day, this is another day, and you can see the dates on the bottom right here too as well. So this being one day, this was December 28th, and then this was December 29th on the Friday, and then this was January 2nd, 2024 of the new year, and then this is yesterday. Well, this is today, Wednesday, January 3rd, as I'm filming this video on this candle. So now that you know that, you just know that, okay, each time frame is going to mean something different with the candle, right? So if I was on the 5-minute, each of these little candlesticks that printed would be 5 minutes and so forth. And remember, if you see the red candles mean it's a bearish candle and the green candles mean it's a bullish candle. But that's what you need to really know when you are looking at the candlesticks, is between a bullish candle and a bearish candle. And if you're selling as well, so let's say we're getting into a sell somewhere right here, right? We're taking sales, so we think the market is going to go down. That means we're hoping that the market will stay. That means we're hoping that the market will stay bearish in our favor. And if we're looking for buys, like this whole thing right here, if we're buying right here, we're hoping that the market will be bullish in our favor. You guys see how all of that is kind of correlating together. I know it's if you're if you're a beginner, it probably is still not clicking too much, but trust me, keep going at it. It will click. Once we keep going further and further, everything ties into each other. But again, if we're talking about bearish and bullish, and right now, like, okay, we know that bullish is what? It's the green candle. And we know that that means, okay, we're buying in a bullish market. So, like, all this right here, this is a bullish market because there's buys. Yes, in a bullish market, you will see bearish candles, but overall, this is a bullish market. I'm trying to get you kind of familiar with the terms that we're talking in. So, yes, you will see bearish candles in a bullish market, and in a bearish market, you will also see sometimes a little bit of a bullish market, but the overall trend of this is bullish. Okay, and vice versa. This whole thing right here on the hourly is a bearish market because the whole thing is selling, right? And as you see, as it's selling in a bearish market, we also see some green candles, which are bullish candles. You will see that in either market, but I'm just trying to get you familiar with bearish and bullish. Okay, so right now, bearish is what? A selling market, and bullish is what? A buying market. And what color is a bearish candle? Red. And what color is a bullish candle? Green. All right. It's not too much to go into when we're talking about candlesticks. Um, but yeah, let's move on to the next part.